And I want to first of all start from the top line, and we're seeing on a year-on-year basis, robust growth 35%, but on a quarter-on-quarter basis, I think we did see some pressure there. We saw Q3 gross earnings down a little bit compared to Q2. Can you just talk us through some of the pressure points there?
Yes, Wole. I mean, our gross earnings went up 35%, like you pointed out. The pressure you saw on a quarter-to-quarter basis was due to two specific actions that we took. The first was we repriced our asset book. Right. Due to the high interest rates, we had to let some business go to make sure that our book was appropriately priced. Secondly, we distributed some of our risk assets at a profit to ensure that we stayed within our single obligor limit.
Right, and of course, a clear positive for me in the Q3 numbers is the significant drop in your funding costs, which led to an 83% quarter-on-quarter drop in interest expense. Can you just share? This is clearly a strategic move. We've seen Stanbic Ibtc expand into the retail, at least trying to grow its retail deposits. I imagine that this is probably what has accounted for this, but can you just share some thoughts on that point?
Sure. I mean, you'll notice that Q on Q, our profitability also improved, with PAT at close to 3 billion. Our cost of funds continues to remain a main focus for us. And in addition to working on improving our deposit mix, towards low-cost deposits, we've also put in place a CP program. For instance, we issued 10 billion in CPs during the quarter. It was very well received in the market. So these various initiatives have helped us to, bring down our cost of funds.
Loan impairment charges, I think that was a bit of a negative from the numbers we did see. At least that some analysts have pointed to that, because we've seen your operating costs continue to improve on a quarter-on-quarter basis, and we've seen very good management there, and of course your funding costs, the points we've made. So can you just talk us through why we're seeing an uptick in impairments?
Yeah, we continue to maintain a prudent provisioning policy. There was an additional name that was added on. We made impairments of 400 million additional. So we just continue to be very prudent in ensuring that as we see any deterioration at all, we make the appropriate provisions. So
hopefully this is a one-off, and going forward we probably won't see impairments down the line. I remember when we spoke the last time for Q2, you did mention the fact that the higher interest rate environment, of course, elevates risk, especially from the SME side of the business, which I know you're exposed to. But can you just talk us through expectations going forward for impairments or NPLs going forward?
Yeah, I mean, there are a few key names, that we're focused on, and remedial action is being taken on that. So, we don't expect it to worsen.
All right, let's move on to the capital market. Of course, everyone knows Stanbic Ibtc is a major player there. Investment banking history tells it all. But your thoughts on the resurgence of the stock market? Recently, we've seen the market up well over 30% year to date. It's come down a little bit since those highs, but there is a feeling that the capital market is back right now. And can you just give us your thoughts on the recovery we're seeing, and perhaps when we may see some primary market issues like IPOs coming to the fore?
Yeah, it's great. Investor confidence is returning, which is great for our business, our stockbroking business, asset management, our custody business. And it's a combination of factors. The fact that, there's some corporate results that, have been positive. Also, as yields have gone down in the fixed income sector segment, you found investors moving into equities. Right. So it's positive. We expect that to continue. We believe that in the near term, as the values of stocks continue to correct and get close to their real values, you will see IPOs and new listings coming on stream.
Do you think that may happen this year, or do you think we're probably looking at next year for that start?
I think this year is almost over, Wole. So it's probably it's next year.
Well,
yeah.
We'll see. I think some people were hoping that at least we may see one IPO this year, but probably not. But okay, let's move on to the floods, the impact of the floods. I imagine that this is something that, of course, has ramifications for Nigerians across north, south, east, and west. But on your banking business, however, what impact are we seeing there?
Yeah, I mean, the flooding is a national disaster, and our hearts are with the communities that are affected. Definitely in those areas, small businesses, agriculture, have been really affected. Also distribution, because of the logistics of actually even getting access to these places. But for our key clients, there really has been no impact. Our banking, our branches in those regions maybe might have suffered some reduced hours, but on balance, there hasn't really been any impact to our own business.
Okay, and maybe we can end this with some guidance, if you can share for Q4. Q3, we've seen the numbers, the market has reacted. Your thoughts on what we can anticipate for Q4, and if you'll be giving any review of guidance that you've given the market before now.
Q4, we remain cautiously optimistic. It's still going to be as challenging, we believe, as the first 3 quarters of the year. And, we believe that we continue to push on executing our strategy, that, we will maintain the momentum that we currently have.